Welcome traders to our midweek technical analysis video. So jumping straight into things here, we're going to go from the start of the week at 10 p.m. GMT on the Sunday, and this is this candlestick here. Let me go ahead and make this a clearer color. So as you can see, we saw some bullish momentum starting off the week upon market open. However, as you can see by the size of this candlestick, we did have a significant amount of exhaustion, which then led to price continuing bearish. We then found support at around this point of interest here at 3,355, a level in which price has tested at as both support and resistance multiple times. As you can see, price ended up testing this level, and then we came up roughly to this same sort of area as we saw here. So we sort of saw a double top. Obviously this time it was with just a wick, and this time was more in a candlestick fashion. Then, as you can see, price ended up continuing bearish, eventually finding support at around the level of 3,300, with price then continuing on bullish from this level and trading at 3,325, which is currently where we're at now. So going down to minute 15, we're going to take a closer look at what we could expect going in, or what we could expect for the rest of this week. So obviously, as you know, and as you can see, gold has been bearish this week. We have continued the bearish momentum since the last week, opened, and as you can see, we have in fact continued that, and we've been touching lower and lower levels. So going down to our minute 15, matter of fact, we're going to go ahead and go even lower. We're going to go down to our minute 5. So as you can see, we are sort of ranging right now. We are consolidating. So we obviously have this sort of bottom level as a support, which we can see price has tested multiple times, indicating to us that this is a level that we want to take into consideration. And again, the top side level, which has tested as a resistance multiple times. As you can see, obviously we do have some exhaustions over it. Obviously this entire area here is sort of exhaustions over it. However, we're going to still conclude that as testing within this same sort of range of resistance. So what we're expecting for this week is, or for the rest of the week, so obviously we've had this bullish push, and prices created a higher high with a higher low. Forgetting any of this information here, just focusing on what we can see here. So price has created a higher high and a higher low. Remember, this is very, very low time frame, so it doesn't mean too much. However, you can see that price is holding up around this level as a support. We could potentially see price come to this sort of level again and then push up through. What we'll be looking for a bullish move from this level is, for a bullish move to take place, we're looking for price to respect this level, this bottom side support, or this point of interest at 3,320 roughly, and we're looking for price to continue on bullish from this level. If we see price break through this point of interest at 3,330 and clear these highs here, we will anticipate that price will hit 3,330. However, we could see a significant amount of bullish volume enter the markets, and we could in fact be targeting our next point of interest after the level of 3,340 of 3,355. Now let's look at a possible bearish scenario. So as you can see, we are sort of in a bottomless pit, which is what it seems. Obviously, as you can see, we created a high here, followed by a lower high, lower low, lower high, lower low, lower high, lower low, lower high. However, we then did actually break structure. So as of right now, looking at current price action on the minute 5 time frame, we are anticipating a bullish move over a bearish move. However, there is definitely still possibility for a bearish move, and that would look something like this. So instead of price holding up at that level that we just spoke about as a support and then continuing on bullish, we're expecting, or we're anticipating, if a bearish move is to take place, we're looking for price to end up invalidating this slower time frame level of support, and then eventually invalidating this level of around 3,320, and then continue it on down, which will be our this will be the level that we anticipate if price does become bullish. Again, the same thing for a bullish scenario. If price if we see a substantial increase of bearish momentum, we will most likely see price come down to roughly around this level, back into sort of the high to 3,200s, and test this same level here. Apologize for the sniffing. I am suffering with hay fever. Drop me a comment below if you suffer from hay fever as well, because I absolutely hate it. If anyone has any remedies or anything like that, let me know, because it is painful. Anyway, so concluding this midweek technical analysis. So start of the week, we saw a bullish impulse. We then saw price reject. We saw an enormous amount of exhaustion throughout the first candlestick on the Sunday. Price then came back down and then tested a level of support at 3,355. Price ended up then breaking through with some help through volatility and volume injected through the New York session. However, price then catapulted and almost waterfalled all the way down from roughly around 3,400 to 3,300, so almost an 1,000 pip drop just from the Monday throughout to the Tuesday, and then price has started slowly creeping back up. However, there is sort of some confusion in and around this area. It's going to be focusing on the lower time frames like we just spoke about, the minute 5. We're looking at these two levels here, the 3,330 top side resistance and the 3,320 bottom side support. The first indication for us to then determine whether we're going to see a bullish or bearish move will be if the bottom side support is broken. We're going to be anticipating a bearish continuation. If we see that top side resistance broken through, we're anticipating a bullish flip. So with that being said, that's going to be our midweek technical analysis. I hope you have all enjoyed. Don't forget to like, comment, and subscribe, and I will catch you in the next one.